Disclaimer: this journal reflects my personal trading activity and operator reflections. It is not financial advice. What to do during a broad market drawdown. Not a one-day dip, not a headline scare, but a sustained decline. Red sessions stacking on red sessions. Positions assigned. Contracts sitting deep underwater, and the screen offering very little emotional relief. This is where most traders break structure. Let's begin with a simple truth. A drawdown is not a malfunction. It is a condition. If a strategy involves selling puts, owning shares, and writing calls, then pullbacks are built into the design. Ownership is a planned outcome. Assignment is a pre-accepted event. Price moving below cost basis is a statistical inevitability over time. The problem is not the decline. The problem is interference. Many investors turn temporary weakness into permanent damage by acting from discomfort. Inventory gets closed at the worst moment. Plans get overridden. Attempts are made to repair what was never structurally broken. That is how unrealized pressure becomes realized loss. So what should be done? First, confirm whether the original position was allowed to exist. If entry was structured, exposure controlled, capital reserved, then nothing extraordinary has occurred. The market is simply moving through its cycle. Second, recognize the digestion phase. When prices fall far below entry, writing calls may no longer make sense. Income pauses. Inventory sits. Capital is not forced into action. This is not inactivity. It is a restraint. Weak operators feel compelled to do something. Strong operators protect structure. Third, understand the role of cash. Capital that is not deployed is not wasted. It is protection. It absorbs shock. It prevents liquidation. It removes urgency. Without margin pressure, there is no forced exit. That changed behavior entirely. Now let's address psychology. During extended declines, the real threat is not price. It is emotional fatigue. There will be an impulse to rewrite the rules. Doubt will surface around the structure. Activity will start to feel like control. But survival systems are not adjusted under stress. They are observed. Time is part of the contract. Some recoveries occur in weeks, some take months, occasionally years. That is why asset quality matters. Durable companies recover differently than speculative ones. Patience without underlying strength becomes hope. Patience with structural strength becomes strategy. So what is done in a market drawdown? Capital limits are verified. Exposure discipline remains intact. Income is never forced. Positions are not liquidated from fear. Completed cycles are closed with order. Open cycles are allowed to mature. Most importantly, discomfort is not confused with danger. Drawdowns test identity. They reveal whether someone is predicting or operating. A mature system does not depend on constant upside. It depends on structure, patience, and defined behavior. When volatility rises and prices fall, the question is not, how do I fix this? The question is, was something built that survives this? If the answer is yes, the job is simple. Hold position. Follow rules. Let time do the work.